The reason why we are optimistic on the Japanese market is that we feel that Japan is a great equity story for 2024, and part of the reason for that is the TSE reforms that were announced earlier, and we've seen as a result of that a more widespread return to raising targets in terms of raising profitability targets and return on equity targets. We've also seen an increase in share buybacks. In addition to that, we've seen an economy which was in widespread deflation for last 30 years return to inflation. As a result of that, we expect changes in the central bank policy. We expect eventual rate hikes from UEDA. All of that we expect to be positive for the Japanese equity market. In addition to that, what we are also expecting is that there will be some stabilization in the Japanese yen. Last month, we saw a lot of volatility there, and that should also be supportive for the Japanese equity story. Now, in terms of Chinese markets, we have a more tactical stance on the Chinese markets. We've seen a bit of outperformance of the Chinese market since mid-April this year, and part of this was related to the policy pivot that we saw in China. However, we still see some issues with the domestic demand. We still see deflation in the economy. The property sector reforms that have been announced by the government, we feel, while they're supportive, they're not enough to revive this sector. So we see China as an attractive market for tactical trades, but we do not see a long-term conviction here right now.